Welcome back to the channel, and as always, if you are copy trading, you're an absolute moron and you deserve to lose all your money. And with that out of the way, we're going to talk about Keysight Technologies, ticker KEYS. Uh, as you can see, they provide um, they provide design and test solutions to commercial communications, networking, aerospace, defense, and government, as well as other industries. And as you can see, if we look at the chart, you see that the company has been trading sideways for a long time. But if we zoom in year to date, you can see that that was very much the case in this range over here, and now has just broken this 250 SMA with crossing likely to occur in the next few days. So first thing we notice, strong momentum down here. And this is one of the reasons why I am entering this trade now, because arguably this would have been, in my view, a stock that we want to short. But now we have confirmation about the macro fundamentals that are driving the idea. So first of all, the market this year was expecting a semiconductor recovery. And whilst that has happened for some companies, it has not quite worked out for these guys yet. So you can see how we kind of stay in a range here throughout what we have been through 2024, but now there's a strong direction forward, downward. And the reason for that is because in the last earnings report, which happened here, 20th of May, they announced a mediocre guidance for the next quarter, even though they beat EPS and revenue, but they also had a big miss on GAAP EPS. So that was quite disappointing, as you can see, and this is the way in which the market has reacted in that way. But I think that momentum can carry on because for the next quarter, which again is already quite small. So if we look at here, uh, they announced $1.41, and for the next one they expect 134 with 8 revisions. So I think that puts us in a position where the market is going to feel increasingly negative about this stock, and I think there's still fundamental reasons to support that view. So for the full year of EPS, so we have 1 up revision of EPS versus 8 down, and also 2 up for revenue versus 6 down. So again, the analyst community, this is in the last 3 months, feels increasingly pessimistic about it. So why did this guidance come about? What is management saying? Well, they see at the moment many companies out there. Remember, these guys provide components that require an investment from their side. And many of them, we're talking about big clients such as Google, Tesla, Qualcomm, Ford, Boeing. Most of those guys they're not doing great, right? The only major client that they have that is actually doing well is NVIDIA. And that, in my view, reinforces my bearish thesis here because you see how, if we look at the valuation, this is how you see the valuation going up, right? It started back in November and has been sustained over a long period of time. And I think the reason why it achieved these levels 25 times is because the market was very, very bullish about the results of NVIDIA. But that now has proven to be, even though NVIDIA is doing okay, it's proven to be not enough to propel the company to justify this valuation. And that's why after the earnings that you see here, you see the valuation going from 25 to 22. Now, do I think that's going to keep going? Like I mentioned already, yes, because if we take a look at a larger time frame, right, see where we are at the moment. There's only been specific periods of time where valuation at this level or above has been supported, and one was during the pandemic where the market was incredibly overbought. So I think the probabilities are that we fall somewhere in this range at say 20, perhaps 18 times next 12 months PE. And that's the reason why I think that this downward trajectory still has room to continue. Now, it may not be immediate. We may have a bit of a pullback here and maybe touch one of these SMAs for that stock to fall again. I'm not saying that I want to enter now necessarily. Um, but definitely, I see the bearish thesis gaining momentum when you add all these factors in. What you will also have to bear in mind is that when we look at the last earnings report, the operational KPIs don't look great either. So we have orders remaining stagnated, and revenue and operating margin also down on a year-on-year basis. So in the meantime, analysts have adjusted uh, their price targets. And to me, that's quite interesting to see that the lower um, bracket has been increased, and we are already below that level. But again, there is a bit of a widespread scattered opinion about this stock. I haven't seen many companies where there's such a dispersion in terms of views, and I think that creates the opportunity for volatility. And that's something that we like. So with all these factors, I think we are due to continue this downward momentum. Also, the earnings yield at the moment is sitting below Treasury interest rates because also the company pays no dividend. So again, I see less and less reasons to own this stock. You also have to see where we stand in terms of a company price versus expectations. You see how we are coming down from this above level, where even during the pandemic years, uh, we were we were sometimes below that. So that happens with sales, with EBITDA, EPS. So I think we are entering uh, a period of time where over the next few weeks or months, the stock could go down, potentially retest the 120 level, which is my price target. And again, analysts feel increasingly bearish about the stock. Look at how the estimates for sales, for EBITDA, EBIT, EPS gap, they're all being decreased uh, just since that earnings report. So uh, the financials as well don't look great on a year-on-year basis with stagnating um, revenues, right? But this looks even worse when we look on a quarterly basis, because then you get the revenues on a negative, and as a matter of fact, that negative trend seems to be accelerating, hurting the gross profit margins, hurting the EBITDA margin, hurting the net income margin. So definitely pre-negative across all fronts. The stock this year is expected to have negative earnings growth, and we will see how the next few quarters play out. In terms of news, and a risk is that while my view on this company is pretty negative, I still see some analysts out there which is with interestingly views that kind of contradict this thesis. So we saw, for example, Goldman after that earnings report, they increased the price target for some reason, which does not seem to add up based on all the factors that we have seen on the disclosure of that earnings report. JP Morgan, they downgraded their price target, and many others have. But Goldman, which tends to be a little bit more conservative on their price targets than the rest, has increased that. So that's just a risk that I would consider, and maybe something I want to look at a little bit deeper to make sure that I'm not missing anything. But for the time being, I think is a good short candidate. So thank you very much and see you soon.